Hello there, lad. Fancy a go at the stock market, do you? The adverts make it look like a quick ticket to riches. Just press a button and you're set for life. But let's be honest, it's not that simple. The stock market is more like building a rocket out of plasticine, possible but tricky and slow. You wouldn't start an animation without a plan, would you? Same goes for trading. Rushing in is a recipe for disaster. The market has its own rules, and the promise of quick money is just bait. You need the right knowledge, not just excitement. So before you dive in, let's make sure you're ready for the journey, with a good map and sturdy boots. Let's get you prepared for the adventure ahead. Right then, what is the stock market? It's a term you hear all the time on the news, in movies, and maybe even at the dinner table. But what does it actually mean? Is it a mysterious place where fortunes are made and lost in the blink of an eye? Or is it something more down to earth, something you can actually understand? Well, believe it or not, it's simpler than it sounds. The stock market isn't some secret club or a confusing maze only for experts. At its heart, it's just a place where people come together to buy and sell pieces of companies. Imagine your local bakery wants to grow, maybe buy a new oven or open another shop, but they don't have enough money. So, they decide to sell tiny pieces of their business to people in the community. Each piece is called a share, and when you buy one, you're helping the bakery raise money to expand. Buy a share, and you own a slice of the bakery. It's like having a little piece of the action. If the bakery does well, you benefit too. If business booms and the bakery becomes the talk of the town, your slice becomes more valuable. But if the bakery struggles, maybe because of a new competitor or a bad batch of bread, your share could lose value. The price of your slice goes up and down depending on how the bakery is doing. Now imagine not just one bakery, but thousands of different businesses, bakeries, teacup makers, wool shops, and more, all offering slices of themselves. The stock market is like a giant, bustling marketplace where people buy and sell these slices or shares of all sorts of companies. People trade shares hoping to make a profit if the company grows and succeeds. Some folks buy shares and hold on to them for years, while others buy and sell quickly, trying to catch the next big thing. But there's always a risk. If things go wrong, maybe the company makes a bad decision or the economy takes a turn, you can lose money just as quickly as you made it. The value of your shares can drop, sometimes unexpectedly. Some people think the stock market is just like gambling, but that's not quite right. While there's always a chance involved, it's not about luck alone. It's not a sure thing, but it's not a roll of the dice either. Trading stocks is about understanding the businesses you're investing in, paying attention to what's happening in the world, and making informed choices. The more you know, the better your chances of making smart decisions. So, the stock market is really a lively dance. A constant back and forth of buying, selling, and trying to guess which way the wind will blow next. It's a place full of opportunity, excitement, and yes, a little bit of risk. But with some knowledge and a curious mind, anyone can join in the fun. Buying a piece of a company sounds exciting, but here's the catch. Most new traders lose money. Why? They confuse excitement for expertise and let emotions take over. Emotional trading, panic selling when prices drop or getting greedy when they rise, leads to bad decisions. Many jump in on tips or trends without understanding what they're buying. That's not investing, it's gambling. Without a plan or research, you're just guessing. The market punishes the unprepared. Control your emotions, do your homework, and treat trading as a skill to be learned. Otherwise, you'll end up with empty pockets. It's a messy business if you're not prepared. Let's get specific. Here are 7 classic mistakes new traders make. These are the blunders that can turn a promising start into a real mess. And trust me, even seasoned traders have fallen into these traps at some point. If you can spot them early, you'll be miles ahead of the pack. First, trading without a plan. Imagine setting out on a journey with no map, no destination, and no idea how you'll get there. That's what trading without a plan looks like. You end up wandering aimlessly, reacting to every twist and turn, and usually it leads to trouble. A solid plan is your compass in the chaos of the market. Second, risking too much money. Never bet the farm on one trade. It's tempting to go all in when you feel confident, but the market can humble anyone. Smart traders know to manage their risk, spreading their investments and never putting more on the line than they can afford to lose. Remember, survival is the first rule. Third, chasing hot tips. By the time you hear about a can't-miss opportunity, it's usually too late. Hot tips are like mirages. They look promising from afar, but rarely deliver up close. Instead of chasing rumors, focus on building your own research and understanding. That's where real confidence comes from. Fourth, ignoring your homework. Know what you're buying. Blindly jumping into trades without understanding the company, the industry, or the risks is a recipe for disaster. Take the time to dig into the details, read reports, study charts, and understand the story behind the stock. The more you know, the better your decisions. Fifth, letting emotions drive. Fear and greed are terrible guides. The market is a roller coaster, and if you let your emotions take the wheel, you'll end up making impulsive decisions, buying high, selling low, and regretting it later. The best traders learn to keep their cool, stick to their plan, and not let panic or euphoria dictate their moves. Sixth, averaging down on a loser. Don't throw good money after bad. It's easy to convince yourself that if you just buy more of a losing stock, you'll make it back when it rebounds. But sometimes a loser is just a loser. Know when to cut your losses and move on. Protecting your capital is more important than being right. Seventh, expecting to get rich quick. The market isn't a cash machine, and anyone promising overnight riches is selling you a fantasy. Real wealth in trading is built slowly, through patience, discipline, and a willingness to learn from mistakes. Don't fall for shortcuts. Focus on steady progress. Avoid these, and you'll sidestep most disasters. Every trader stumbles, but those who learn to recognize and dodge these pitfalls have a much better shot at long-term success. Think of these mistakes as banana peels on the trading floor. Step carefully, and you'll stay upright. Trading is about patience, discipline, and learning from mistakes. The best traders aren't the ones who never mess up. They're the ones who reflect, adapt, and keep improving. Keep a journal, review your trades, and always look for ways to get better. Don't let excitement cloud your judgment. The thrill of a new trade can be intoxicating, but it's important to pause, breathe, and double-check your reasoning before you hit that button. A clear mind leads to better choices. Build your knowledge, not just your hopes. The more you learn, the more prepared you'll be to handle whatever the market throws at you. Read, study, and never stop asking questions. Curiosity is your greatest asset. Keep your trousers on by steering clear of these pitfalls. It's easy to get caught with your guard down, but a little caution goes a long way. Stay alert, stay humble, and remember that every mistake is a lesson in disguise. That's how you stay in the game, by learning, adapting, and always keeping your wits about you. The market rewards those who play smart and stay the course. Trading isn't a slot machine, it's a craft, like sculpting or playing an instrument. You won't master it overnight. Your first attempts will be rough, and that's normal. Like any skill, it takes practice, study, and patience. The real tools are knowledge, strategy, and discipline, not just a computer and a bank account. Learn to read charts, understand the news, and develop a strategy that fits you. Are you patient, or do you prefer quick moves? Find your style. Start small, read, watch, and practice with a demo account. Ignore the flashy promises, focus on building real skills. Treat trading as a craft, and you'll improve over time. Rush it, and you'll end up frustrated. Let me introduce you to Arthur, a sensible, good-natured fellow who, like many of us, found himself swept up in the excitement of the stock market. Arthur had always been careful with his money, saving up bit by bit for his dream workshop. But one day, he caught the trading bug, and everything changed. It all started when Arthur overheard his friends at a cafe, excitedly boasting about a hot new tech stock that was guaranteed to skyrocket. The fear of missing out, FOMO, hit him hard. Without a second thought, Arthur decided to jump in with his entire savings. He didn't bother to research the company or check its financials. He just wanted to be part of the action, swept up by the thrill and the hope of quick riches. At first, things looked fantastic. The stock price soared almost overnight, and Arthur felt like a genius. He imagined all the things he could buy, the trips he could take, and how impressed his friends would be. For a brief moment, it seemed like he had cracked the code to easy wealth. But then, as quickly as it had risen, the stock took a nosedive. Some bad news hit the company, and panic spread like wildfire. Arthur watched in disbelief as the value of his investment plummeted. His dreams of a new workshop faded with every tick of the falling price. In a panic, Arthur sold everything at a huge loss, desperate to salvage what little he could. His hard-earned workshop fund was gone in an instant, replaced by regret, and a harsh lesson in the dangers of acting on impulse. Looking back, Arthur realized he'd made every classic mistake in the book, chasing hot tips, letting emotions dictate his trades, and risking far more than he could afford to lose. He had ignored the basics of investing, thinking he could outsmart the market with a lucky guess. The truth is, the market doesn't care about your dreams or your fears. It runs on facts, data, and discipline. Success comes not from luck or hasty decisions, but from careful planning and patience. Arthur's story is a cautionary tale, a reminder that excitement and fear are powerful but dangerous motivators. If you let your emotions take the wheel, you're likely to end up lost, or worse, broke. The best investors do their homework. They research, plan, and manage their risk. They never bet more than they can afford to lose, and they always keep their long-term goals in mind. So learn from Arthur's mistakes. Don't be a trader in a hurry. Take your time, study the market, and remember that every setback is a chance to grow wiser. The market rewards those who are patient and prepared. Building wealth is a marathon, not a sprint. It takes time, discipline, and a willingness to learn from both wins and losses. Don't let haste or the promise of shortcuts cost you your future. Invest wisely, stay calm, and let your patience be your greatest asset. How do you avoid Arthur's fate? Simple: learn before you leap. Build a solid foundation before risking your money. Read reputable books, take beginner courses, and seek out reliable sources. Understand yourself, your risk tolerance, your goals, your time commitment. Choose an investing style that fits you, whether it's value or growth. Remember, learning never stops, markets change, and so should you. The best investors are lifelong learners. Invest in your education before you invest in the market. It's the best investment you'll ever make. Ready to start? Here's your starter kit. First, use a demo account to practice. Make mistakes with pretend money. Second, begin with index funds or ETFs. They're safer and more diversified than picking individual stocks. Third, only invest money you can afford to lose. Never risk your emergency fund. Start small and build gradually. Finally, keep a trading journal. Write down every trade, your reasons, and the outcome. This helps you learn from both wins and losses. Be disciplined, not impulsive. Focus on steady progress, not quick wins. These habits will set you up for long-term success. Treat your journey as an adventure in learning. Stay curious, stay cautious. That's how you build a strong foundation. We've peeked under the bonnet of the stock market. It's not a monster, but it demands respect and patience. There's no magic button for instant wealth. Patience is the real secret. Investing is a marathon, not a sprint. There will be setbacks and temptations, but stick to your plan. True wealth is built over years, not days. Every expert started as a beginner. Start right, learn, be cautious, and think long-term. With patience and curiosity, you'll build the skills you need. Now how about a nice cup of tea? You've earned it.